Hello and welcome everybody. I'm Janne Muta, the Chief Market Analyst for TIOmarkets, and today we start trading. This is a webinar especially for you if you want to know the basics, if you want to know how to prepare yourself for the trading day, how to prepare for the trades themselves, and how to execute trades. So this is going to be a live event where you can get your questions answered. And don't hesitate to ask whether the question feels big or small. We try to tackle it as long as we have time to do that. But also, please appreciate that if you're a more experienced trader, some of these things might not be exactly appropriate. They might be exciting to you because you've heard them before. But then on the other hand, they say that you should repeat, and that's how you learn. And especially with trading, that is so true. But yes, I hope that there'll be material for people at different levels. And basically, I do hope that you will get something out of this trading session or training session, I should say, so that you can develop as a trader. Before we started, I was asking people how long they have been trading, and I have seen some answers in the chat here. Let me go back a little. And yes, somebody has been trading for 3 months, limited success, and somebody only 2 weeks. Okay, there's a lot to learn for you. Great to have you here with us. And somebody else has been trading for 2 years, etc., etc. So I do believe that there'll be lots of useful material for you. This webinar is recorded and you will get the recording via email so that you don't have to make notes and you can concentrate on asking questions and listening to me. Yes. Okay. Just very briefly before we go forward, you might want to check this trading account that we have. It's excellent. If you want more information, go to TIOmarkets.com/contact, but you basically get 0 commissions per lot, no monthly subscription fees, very tight spreads, and you have a big selection of instruments to trade on. So I really recommend you check this out. And briefly, my background here, I'm not going to spend too much time on it. You can read it here. But I have been in the business since 1998, working in different sectors in the financial field. And in my current role, I'm here to help you guys. So that's something I love to do. I love to help people to learn, and I love to help people especially when it comes to markets and trading. All right, cool. Capano is saying that I've been in the game for 1 year and 6 months, mostly fundamental analysis, but an NFP showed me flames and blew my account. Yeah, that's the problem with the fundamentals. If they kind of tell you why things are happening, but they don't tell you everything. They just give you the very broad picture of what's happening in the economy. And then there's the risk that we might interpret the fundamentals wrong and we might get the wrong idea. But the most important thing is that we need the technicals. We need to understand what's happening with the price action so that we can react to it. We don't want to anticipate something because we don't know the future, but we want to be able to react on things. And that's why this webinar is in place. That's why we wanted to put this webinar together so that you are prepared to trade, so that you don't have to think on your feet all the hundreds of different questions that come to executing a trade, but you can prepare your mind before. Think things through first, and then you can proceed into trading. Much like an airline pilot, they go through their checklists before the takeoff, and they know exactly what they need to do. They don't think on their feet. They are well prepared. Okay, but before we go forward, I need to remind you that none of this is going to be investment advice. So the views expressed in this presentation are our opinions only, and they are made available purely for educational and marketing purposes, and they do not constitute as advice or investment recommendation. So please always do your own research, do your own thinking, and if you agree what we are presenting to you here, then you can act on it, but only if that makes sense to you. So we are not telling you to do this or that. Okay, so we want to be able to trade. We want to be able to understand the markets, but before we can do that, we have to have a trading account. So just very simply, if you don't have an account yet, go to TIOmarkets.com, hit that register button, fill in your details, and then choose your regulator. If you are in Europe, in UK, you can choose FCA. If you are elsewhere, you choose the other option. But then once you have those details ready, they'll be emailed to you. I mean, once you fill in your details, you have an email that gives you the credentials to log into the client area. And there, if you go to open live account, you can basically, let's use the demo account first. Obviously, we want to use live accounts at some stage, but for learning how the platform works, to get the first steps in trading, then obviously we want to have the demo account. But when you open a live account, the demo account works exactly the same, or the procedure is exactly the same as with the live account. So you choose your platform, either MT4 or MT5, depending on which you like. I like MT5 because it has some advanced features that the MT4 doesn't have, but you might have some EAs that don't work in MT5 environment. So that's probably the biggest reason to choose MT4. But if you don't have such considerations, then just go for MT5. And you choose the account type. Here in demo side, we only have the standard account, so we have to choose that. And then we choose the base currency once the site, my internet seems to be a little slow now, probably because of the webinar. So, oh, that's strange. I have 100 megabytes connection here, so that shouldn't be a problem, and it usually isn't. So anyway, while the website is trying to sort itself out, we can go to the deposit button here, and you can see all the different deposit options here, and basically get the money over so that you are ready to trade. And just briefly, let me show you here. This is the kind of email you get after you have registered with TIOmarkets, and you have the wallet ID, and you obviously have the password that you set up earlier. And then once you download your trading platform, MT4 or MT5, and you have opened the demo account or the live account, you get another email where you have the account number and you have the password. So this is a demo email, and that's why it says demo 1. Okay, so that's briefly that. Let me see if there are any questions here, any questions related to this. And let me see, any questions? Okay, not yet. But if you have any questions about this, and I don't say for any reason happen to see those, you can always email support@tiomarkets.com and get your answers there. Okay, so I want to talk about how to prepare for the trading day in the morning. And while I do that, while I bring up something here, please tell me, how do you define trading success? How do you define success in trading? You might think that the answer is obvious, but I challenge you to think a little further because it actually is a very deep question. It isn't just about X. It is about lots of different factors once you start thinking about it, and I'm going to shed more light on it, but let me hear your thoughts and answers first. What do you consider as being a trading success? Okay, Garrett, at the end of the webinar, I'm going to give you a code, and then you get the gift. But let me bring up something here. Okay. Just a moment. All right. And I need to go to another page. Just a moment. Here we are. Okay, if you go to TIOmarkets.com/analysis, you get to this page. That link brings you to our blog where I publish the daily analysis every morning. And I'm going to talk about this a little bit because this is not just for advertising purposes or marketing purposes. This is there to help you to have critical information for trading. And I'm going to open today's article here, and I'm going to explain you a couple of things, why I provide you with certain information in here, in this report every morning. It's not there just to fill the space. It's there so that you are better prepared to trade. All right. Peter is saying that being a trading success means being consistent in profitability. Less losses, more gains. Peter, you have actually understood quite a bit about what you need to understand about trading. You are after consistency. Obviously, you want to be profitable, but you are after consistency. I've seen traders who make a lot of money, but they lose a lot of money a few weeks later, and that's kind of not helpful. So we need to have consistency. That's a very good point, but there's actually even better definition that I'm going to share with you in a moment. Ashley is saying that success in trading means consistently following your strategy and upgrading it according to market sentiments. Cynthia is saying discipline. Very good point. I do agree with Ashley. I do agree with Cynthia. And actually, my definition, and it's not originally mine, it's from somebody else much wiser and better trader than me, but it kind of agrees with Ashley's point. Success in trading means A, consistently following your strategy, and B, upgrading it according to market sentiments. Yes, you need to be consistent, but you need that discipline to follow your strategy. So the way I'm thinking this, a successful trading day isn't the day when I make money. Successful trading day is a day when I was disciplined and followed my strategy. Can you see the difference? If I'm thinking money only, if I'm thinking profits only, then I'm thinking, then my thinking is results oriented. And as long as I am results oriented, I keep on making decisions based on whether this or that trade is looking good and going to make money. And how do I feel after taking the loss? How do I feel after taking 7 winning trades in a row? Because there's a bit of a danger at both ends. If you think about the negative emotions or if you focus on the negative emotions that we get after losing trades, they start to impact negatively the next and the second after that, and the third after that. All those trades that come after in the future, they are impacted by our negative thinking. So really, we should get away from thinking the losses, but we should also get away from thinking the winnings also, because most traders, once they have had some success, they start thinking too much about themselves. And I've done this too. I'm no different to you guys. So, and Cynthia, you're welcome. I agree. This is true. And I'm more than happy to help you guys here. So you have to get away from this emotionally driven thinking and emotionally driven trading that usually causes losses. If you think anything in your life, whether it's relationships, whether it's your behavior in traffic, whether it's your behavior in business, if you think all those areas in your life and react via your emotions in those areas in your life, usually that brings nothing good. And nothing good comes out of volatility in emotions. You need to focus on something else. And especially in trading, you need to focus on your process. So first of all, you need to decide beforehand, this is going to be my process. And to simplify things, let me just bring up a good old paint here. Your process could be like this. It could be looking for, let me see if I can make this a little thicker. Here we go. And I actually want this line. So your process could be as simple as this. You look for markets that create higher lows and higher highs. And then you want to see a market that has a moving average pointing higher. So the moving average could be following the market down here. Or you might have another moving average below, and you want to have the slower moving average below and the faster up. You want to have the higher lows. And then you start looking for areas of previous resistance, and there you want to go long to buy the market. So this might be your strategy. And if that's what you do well, if you find that this is where your success is, then you shouldn't consider all the other different potential strategies there are, but you just concentrate on this. Okay, but I'm getting ahead of myself a little here. So Leo is saying discipline, continuous learning, and not being greedy. Very good point. I love that, Leo. Don't be greedy, because that again takes you into this area of emotions. Okay, cool. So first things first, in the morning, this report comes out around the London Open. So make sure you read it, because it's not there for fun. I'm not spending 3 hours every morning just to read about the markets and going through the different markets and typing the report just to end some empty space. It's there to help you to trade better. So I'm going to explain you briefly what different stuff and good benefits you can get out of this. So you want to be able to understand the major themes. And often the headline tells you something that has happened yesterday. And once you get the hang of it, once you get to read these reports more, you can start to understand, okay, this is how these things connect together. This is why and how these things are important. So yesterday we had the biggest CPI jump since 2008. I think July 2008. And also this morning there was a surprise hawkish tilt in the RBNZ monetary policy. So this resulted, first of all, the first event resulted that US dollar going down. And the second resulted in New Zealand dollar really taking off. So this is valuable information. If you understand that the CPI in the US might actually be might be actually rising faster than the Fed has been thinking it might, or projecting it might. And especially if you notice that month after month, CPI stays at a higher level than the Fed has been expecting it to stay, then you can start saying, and this is already now what the markets have been thinking, maybe the Fed has to come and start tapering sooner rather than later. Tapering means that they stop buying the bonds. And if you don't buy the bonds, I mean, if the Fed doesn't buy the bonds, to be exact, then what happens to the interest rate? Let me know. Some of you more experienced might know what happens to interest rates and yields, especially the bond yield, if the Fed stops buying the bonds. And I'm sure those of you that have been reading my reports beforehand know the answer for this. Yeah, Mohed, it's a little hard to train to be disciplined. Yeah, it is challenging. You need to be disciplined in all areas of your life. You can't be undisciplined in every other area of your life and then expect to be disciplined in your trading. It is not fun, I admit that, but that's the truth. Yeah, Cynthia is right. The yields will go up. So if the Fed doesn't buy the bonds, the bond yields will go up, which will attract money into USD. And that's something that you can see happening all over and over in the markets. So, and then I think this tells us quite obviously what's happening to a currency if the central bank, like in this case New Zealand Central Bank, decides to change their monetary policy. The market is rallying against the dollar, and 1.16% is a big move in currencies intraday. Also, once you read these every morning, you get to understand how these news have impacted the markets. Okay, the dollar went up, and all these dollar counterparts here, obviously DXY is the dollar index itself, so ignore that. But all the others, Aussie, Cable, Canadian, JPY, Euro, all these markets went down as we heard that the CPI jumped. There was the biggest jump since the July 2008. So, but then the question is, how much did they move? And as you can see, the moves weren't that big. And okay, there they have changed a little. Obviously, the markets do change all the time, but I had them recorded down here. Euro dropped 0.5%, Aussie 34 basis points, Canadian dropped about 30 basis points. So, okay, it was a drop, but it wasn't a massive drop. And that's something you need to understand also. You need to start learning what move is a big move. What does it mean? And if we don't see a big move after a news like this, then what does it mean? And why would that be the case? And this report actually gives you the answer also. So the traders, I think, are waiting for the testimony tonight from the Fed Chair Powell, because they need to understand they need to get more information on the Fed's thinking, especially after this CPI jump. So, okay, the other currencies came down, but they didn't come down that much, which means that we probably don't want to be selling more right away after. We just have to do what the other market does. Either just wait in cash or trade the ranges and just take little, say 3, 4, 5, 6, 7, 8 pips trades here and there, or then the other option is to stay in the sidelines until we get to see what the Fed is most likely to do, and more importantly, how the market is going to react to what they perceive the Fed doing. Okay, so you get to understand the major market themes, those themes that drive the markets. At the moment, the big theme in DXY is that the dollar is bullish. Yes. Peter here says that the dollar index looks bullish. Yes. And by the way, bullish means different things to different people. Some people look at the next 15 minutes, some people look at the next 2 weeks, and some people look at the next 2 days. So be always careful when somebody says a market looks bearish or bullish, because they probably have a very different idea of bullishness or bearishness than you have. Okay, you'd like to hear the views on gold. Let's try to cover the other stuff first and then go to gold as well. Gold has been moving in sort of kind of a tight range over the last few days. It hasn't been going anywhere. So I think that tells you that traders are just waiting for more information to act on. They want to know what really is happening. What's the timeline for the Fed's tapering? Let me just grab a drink here. Safiso is asking, so the New Zealand USD has had a big move due to fundamentals from each country. It is rather related to the announcement that the central bank, let me find the news. I think they said that they will stop buying bonds. They will stop some of their monetary easing measures earlier than expected. I think it was as early as the end of the next week. Yes. Here's the answer. Early this morning in European time, the Reserve Bank of New Zealand announced that they will reduce the level of stimulus and stop additional LSAP purchases as soon as July 23rd. And that's next week, Friday. So that tells you that as the Fed is looking to tighten the monetary policy, so are some other banks doing it as well. Canadians did it earlier, and there's been a strong rumor that they will cut another $1 billion from their bond buying program today. So look for cat pairs today. And Europe, basically the European Central Bank is saying that we don't want to change our policy yet, but obviously if all the others are doing this, then the Europeans have to at some stage follow. And now if the Canadians, and this is a question for you, if the Canadians take another $1 billion off from their bond buying program, and to give you some perspective, the last time they took $1 billion off, that was 25%. So there's about $3 billion left. And I think that was $3 billion on a monthly basis, if I remember correctly. So if they take another $1 billion off, what's going to happen to CAD Euro or Euro CAD? What's going to happen to Canadian currency against the European currency? While you think that, I'm going to type in your answers. I'm going to move on a little. So you also get the feel for the risk sentiment if you read this report. You get to see what happened with gold. Okay, like discussed earlier, gold is not doing much at the moment. And if silver moves only 0.38%, that's also nothing. So that tells you these traders are really waiting for the Fed. They want to see what the Fed is doing, and they want to get more information. Crude oil was moving 0.55%. That's a decent move higher. But this is driven a little bit more by different projections on what the OPEC is doing. Are they going to limit their supply or not? And also on what's happening with the COVID-19 figures. Are there going to be more lockdowns? Like in Sydney at the moment, there is a lockdown in place, and I think for another 3 to 4 weeks. If the European countries are going to go into lockdowns because of the Delta variant, then obviously we might see some downside in oil. But at the moment, it is still trending higher. Yeah, Safiso was saying that it will sell. So you're saying that the euro will go down against the CAD, right? Hey, Katlego, morning. Welcome to the webinar. We've been going on for 50 minutes, but that's okay. You are still welcome. Great to have you here. All right, so you get the feel for the risk sentiment. And also, if you read what's happening with stocks, the losses yesterday in stocks weren't that big, only 0.31 to 0.38%. That's relatively small, but the fact that all the indices came down and the fear index went up by almost 6%, that tells you market participants are a little nervous. The markets have gone up a bit, and they know that today is going to be a speech by Powell, which has the power to move the markets. So they want to be a little prepared. And if the Powell says that actually we are thinking of starting the tapering sooner than earlier expected, then I think VIX will go up and the stocks will go down further. Peter is saying, so all the slow moves in the market are due to investors waiting for information from the Fed. Pretty much like that. Let me just explain something here. See if I can get rid of these. Yeah. If you have a market that's moving like this, what does it tell you about supply and demand? Tell me, what do you think is happening between these two boxes? If your market is moving sideways, what's happening with the supply and demand? Anyone? Is there a clear imbalance in supply and demand, or is there a balance in supply and demand between that resistance area and this support? Zaid is saying not enough supply and demand. Samantha is saying there's some kind of correction happening. Not enough. I see. Zaid is saying not enough supply and demand happening for a breakout to take place. Yeah, that's true. And Samantha, it could be a correction, but so that would assume you have market that has been coming higher, then starting moving sideways, and then you are expecting this market to roll over. That could be your correction there, but that doesn't exactly answer my question. I think the correct was it Zaid? Zaid was fairly close to the correct answer here. We have a relative balance in supply and demand when the market is moving sideways. So when you have a trending market, there's more demand than supply. Then there's a little bit, there's a small period or short period when you have more supply than demand. But then the same momentum resumes, and again you have more demand than supply. Right? Isn't that correct? So now over this period here, you have more demand than supply, but over this period, you have a relative balance between supply and demand. And the reason you have this relative balance is that the traders don't know exactly what to do. They don't have more information, or you could say that they are quite happy with these prices. They don't see a need to push the market beyond those boundaries. So that tells you there isn't, the market theory says that the prices always reflect all the information there is available. That's a very, very contested idea, but there's an element of truth to it. If you see the market moving like this, it's most often because the market is expecting to see more information or expecting to hear more information. Hey, Maklamere, lovely that you find this interesting. I'm very, very happy that this is helpful. So any questions, please feel free to ask. So yeah, in a way, silver and gold are moving sideways because of this. But when you have then later on, let's say that some information we can call X enters the market here, then, and let's assume that information is bullish for the market, then there's going to be suddenly a need to adjust to the new information. The institutional money starts to piling in and the market starts to move higher. Oh, thank you, Leo. Yeah, I've had 20-something years a time to look into this stuff. So I have been able to grab a couple of things along the way, and I'm very happy to share this with you guys so that you can learn. But see, that the thing here is that when the market moves like this, it's institutional money moving the market. It's not some retail traders from a little town moving the market higher. It's the big money in big funds, millions and billions, moving the money higher, the market higher. So therefore, please don't try to fight this. I often talk about Mrs. Market. It's if you want a happy marriage with Mrs. Market, the only thing you have to learn is to say, yes, dear. Yes. Yes, dear. If Mrs. Market says, now we're going to go up, you say, yes, dear, and start buying. If you keep on fighting Mrs. Market, you can have a very, very miserable life as a trader. Okay, hopefully that helps you to remember to stay obedient, because this is the marriage that she wants to have. She wants a full obedience from you. Okay, let's move on. Then with this report, you quite often see me listing. I go to a day before report. You quite often see me listing the biggest movers. So we basically had among the TIOmarkets CFDs, there's thousands of stocks in the US equity market and tens of thousands of stocks in the global equity markets. So obviously we can't provide CFDs to all of those, but we have a good selection of CFDs that you can trade in stocks. So I have listed here the stocks that had moved the biggest yesterday, the day before yesterday, actually. So on the previous day, Tesla had risen 4.38% and Disney 4.15%. And then you get the ones, there's the 5 biggest movers up and the 5 biggest movers down. I'm not saying that because, let's say, Hewlett-Packard is listed here as a stock that has moved downside. I'm not saying that it's an automatic reason to go and sell this stock. It's a reason to go and see what's happening with the price. Oh yeah, Leo is saying that the market is definitely a female, quite volatile. Yeah, but to be fair, men can be also sometimes a little volatile, but yeah, I get your point. Yeah, but these are reasons, these are kind of alert signs for you to go and see which markets are moving, because when you are trading, you want to see some movement. You can't make money if the market doesn't move. So you want to see the markets that move. So that's part of your preparation process in the morning, to understand which TIOmarkets equity CFDs have been rallying or losing a lot, and that helps you to decide. And then also, I also tell you what the biggest gainers were and losers were in the S&P 500 sector level. That's the word I was looking for. So the sectors that gained the most were financials and real estate, and then the communication sector. And consumer staples was actually the only one losing on that day. If I know, that was, yeah, two of those, energy and consumer staples, were losing that day. Very small losses, 0.16%, 0.15%. And then if you see this information, you can understand, obviously not when you are very, very new to the markets, but over time you can see that, okay, financials, it's a sector that benefits from periods when people believe that there is a reason to take risk. So it's called a cyclical sector. It's not a defensive sector like as consumer staples. So that's valuable information also. And like with trading, like with everything in trading, not all this information is going to line up just perfectly all the time. Usually it doesn't. It's like, as somebody said, it's like herding cats. There's no way of getting them to stay in a straight line and behave nicely. The information in markets is like that. But sometimes, every now and then, a lot of things come together. You can see that now the market is bouncing up from this major support. It's being supported by cyclical sectors in the stock market. Gold is going down. We are seeing Aussie, New Zealand, CAD going higher because those markets are cyclical markets. They benefit from the periods when people are not risk averse but ready to take on risk. So all these information, when it comes together, and that it can help you immensely in your trading, because then you can see that, okay, now this is what's happening, not in this one market only that I'm following, but this is happening generally in the markets. All right. Can you see my point here? Does this make sense to you guys? Let me know in the chat. Okay, while I wait for your answers, and I hope there is still somebody there. Ooh, anybody out there? Don't leave me alone. Okay, while I wait for your answers, I want to show you this. Basically, in the weekly video, okay, at least somebody is saying that this makes sense. Maybe others went for a coffee. But Ebere Chuvu, hopefully I say your name correctly. You are obviously interested in this stuff, and a couple of other guys. Peter, Cynthia, great to have you with me. Yeah, you don't have to understand everything on the one go, Cynthia. That's perfectly fine. And it is something that you learn to see over the years, over the months and over the years to come. And the more time you spend with the markets, the more you understand the markets. So this screenshot here is from our bullish and bearish markets video. Let me see if I can copy this so you can access the video link from. I'm going to paste this into the chat. There we go. So I was when Tesla was trading somewhere down, I think it was here, we said that we believe it's going to go higher, and we gave a target. I basically gave you a target, and the target was filled here. The market moved to this level and slightly above. Then I said, okay, and when it was rolling over, I said, I think it's going to now come down. When it was here, I basically gave you this area saying that I think the buyers will come in at this level because we have the moving averages there, we have the rising trend line there, we have a level that used to be resistance. All those things come together inside this area. So let's see what happened. Market came down to this area and bang, it went higher. So if you understand, the more you understand about the other things that we've been talking about, and the more you understand about the technical analysis, the more you are able to catch moves like this. Yeah, this is not something that you can just think about for 10 minutes every day and then forget and then just blindly take trades. Obviously you can do that, but don't expect great results. But yeah, so spend some time, read through the report. If you have questions, you can email me at support. Email me on support@TIOmarkets.com. I'm going to type the email address here in the chat. There we go. And they will forward that email to me if you have a question, and I either will reply to you or I will reply in the next webinar. Then what else? Then we have the macro drivers. These really, because with all the markets, we are basically trading against the USD, or most of the markets. Forget the crosses, forget the Japanese stocks, for instance. But even though those markets often have correlation with the other markets that trade against the USD. So it's very important to know what's happening with the dollar. And here I have for you a brief sort of box that you can check through, and we update it when necessary. But you can always go back to this box and remind yourself, okay, what's happening with the yields? What's happening with employment? What's happening with inflation? What's happening with the US stimulus and the Fed? So this is a very helpful resource for you. Make sure you understand how these major things impact USD and then the other markets. And again, please be merciful to yourself. It takes time to learn this stuff. Okay, let me see my notes. What else did I have here? Okay, yeah, in general, this report helps you to understand the macroeconomic trends that will impact the markets. And I always give you a couple of markets also that are interesting, that are at interesting levels, or there's been some interesting development here. Like I was saying, that the strong rally from that wedge kind of sets the scene for the pound USD for this week. And if we go and see what's happened with cable, let me go. I'm going to bring up cable. Pound USD, there it is. So there was the upper end of the wedge and the lower end of the wedge, and the market moved higher. And I said that when the market is trading at resistance like it was here, there's always a risk that the market retraces lower, but I believe that the market is bullish as long as it stays above these low here, just based on the fact that it has broken out of this wedge with a pretty good volume. and the market came down, and now today it has rallied higher. So let's go and see what else there is. If you have to say, there's so many scammers in this industry that they will tell you that my system makes 90% of the time money for you. You have to send your money to me and then you'll be a millionaire. If these guys were millionaires, they wouldn't need your money. And if they had the system that worked 90% of the time, they would be probably a little richer than Warren Buffett or Richard Branson. So don't believe those guys, okay? I'm saying basically come here and read and learn to understand the market yourself. All this material is there for you to learn. Okay, Franklin is asking, thanks for the education. How do I understand the signals from TIO? Because it's a little different from the general signal numbers. That's probably something that we have to have a separate session on, separate webinar. But I would say, as a rule, if you see something in TIO signals, go to the markets based on what you have learned in these webinars and by reading my articles here. Go and evaluate the price action yourself. Does it make sense to you? If you agree with the signal that we give you via the app, then only then take the signal. Because obviously you don't have the inner confidence on signals if you don't understand what's happening with the markets. Why is this signal good? You obviously you can't understand everything. Like I said before, you don't expect yourself to understand everything on one go, but give yourself time and you will learn and become better. Yeah, I think I'm kind of different to these people who advertise with their 90%, 100% success rate systems. I'm basically saying, come here, see what you learn from my mistakes, learn from my successes, and go back to previous articles. They all are there. You can basically read the previous articles and make sure it's not, what I'm saying here isn't made up. Like here I'm saying, okay, we had another success with Tesla. I'm not only saying that, okay, we have been successful with Tesla, I'm giving you the details why it happened, and you can go and verify yourself. Cool, but we have to rush on. So once you understand these things that the morning report gives you, then you can start asking questions. Questions that are highly, highly important in the start of the trading, because, and this goes to the idea of being disciplined. So at this point, I do want to ask you, okay, Cynthia, that's fine. Yeah, I do understand. You will get an email and you get this recording, so that's fine. You have the meeting, so you have to go. That's perfectly fine. Thank you for being here with me. It was lovely to have you here. Yeah, my next question to you is, how many of you has a written trading plan? Have you written down your trading plans? Leo is asking, how long is this webinar? I really can't tell you. I used to try to give people an answer and say, okay, this is going to take 50 minutes or 90 minutes, but I've given up basically because I find that there's so much to talk about. And yeah, you will be getting recordings, Stephen, yes. And I find that it's kind of difficult to stick to the certain timeline. Anyway, you should have a trading plan. And the next question will be, check how much you can risk according to your trading plan, how much you can risk today. If you have $10,000 account, let's take this market here, for instance. And I'm going to go to Euro USD again. Let's see. So here we have a support. Market rallied to it, went slightly above the support, and then started rolling over. Let's assume that you were looking for, on that day, you were looking for sell opportunities in this market. Based on this, that the market is rallying back to this area of resistance, and based on the fact that I think if you draw a line here, okay, it's not quite. Okay, that's a little made up because I'm making this up. But let's stick to the facts. We have the moving average fairly close. We have this former area of support that has been violated. Let's see what at the time this was the lowest low. So we actually had, we can correct this now that we have the Fibonacci retracement levels in place. We can say that, okay, this is actually a quite interesting level. We have this previous high, and we have the 23.6 Fibonacci retracement level, and we have the moving average. All these things coming together inside this area. So based on this, let's assume that you were looking for a shorting opportunity here. So how much would you risk on this trade? That would be the question. And you need to have a trading plan in place that says, okay, I'm not going to risk more than 2%, for instance, per trade. So if your trading account size is $10,000, then your 2% risk is $200. So from here, if we move up, we can see that, let's say we wanted to place the stop, and I'm going to create a level here, make this a little, there it is, a little wider and red. Let's say that this was the stop level, and you entered the trade here. So with one contract, this risk would be $376, 0.32%. You can see that number changing there as I drag this up and down. Now 760, 564, and about 367. So let's say 370 with one contract. But because you don't want to risk more than maximum 2% per trade, you want to make sure that you are trading a smaller size than one contract, right? Say, for instance, 0.5. So the way to do that is to, in here, just change this 0.5. And, you know, then you just simply hit sell if that's the way you trade. Other people might want to trade with, say, for instance, you might want to trade with limit orders. So you right click here and you go and you click sell limit. It places the limit here. And then when you double click it, it opens this window. And when you press up there, you press on this, it moves the stop higher from your entry level. There you can see that stop level, and there's your potential entry level. You click modify, and now you have a stop in place. By dragging this higher, you can see on the left-hand side, you can see how much over here. I can't show it on one go, but if I place my cursor here, yeah. So here you can see how much risk you have in the trade. That's $360 there. And if you want to bring it down, and I want to see how much it is. So go back there. That's about $180 something. Yeah. So now your trade risk isn't more than $200. Isn't more than 2% of your say maximum risk allowance per trade. Yeah. Peter is saying that this market is clearly going lower. We have now that you, Peter, talked about it, let me just briefly tell you what I'm looking at in these trades. Excuse me. But before that, one more thing on the questions that you have to ask yourself in the morning. The first one was, how much do I risk per trade? And the second one is, how many trades you will take per trade, per day. So if you are going to take, say, if your risk on the whole day is going to be maximum, say, 5%, or let's say 6%, and you are risking 2% per day, then your maximum risk per day is obviously $600 and $200 per trade. Okay, I want to talk about mental preparation in a moment, but let's briefly talk about Euro USD here. Peter was saying that this market is clearly going lower, and I'm thinking that you are referring to this lower high there, another lower reactionary high there, and then yet another one here. And also we have the moving average pointing lower. So yes, this market is at the moment making lower highs and lower lows. So that is true. Now every market that is going to a direction, it has several levels where you could be selling this market. So Peter, where would you be a seller if you wanted to be a seller in Euro USD? Would you sell at current levels, or would you wait for something to happen? Yeah, Gunsley was saying earlier that because it's really hard to stick to the plan because of the greed. Yes, it is true. But if we base our trading on greed, then we are again basing our trading on emotions. So we have to, and that's not professional trading. If I came to you, Gansy, saying, okay, I'm going to manage money for you. You can give me your life savings, and I'm going to trade these markets purely based on greed, because I know that I get a cut of your profits if I make money for you. So I'm going to take big risks because I'm greedy. And if everything goes badly, you're going to lose quite a bit of money. If everything goes well, we both make money. Would you do that? I don't think you would. So ask yourself, would you give to yourself your life savings to manage in trading based on greed? I don't think you would. Zaid is saying, I would wait for a pullback and then a three-wave pullback and then sell, and then for a sell confirmation to sell. Yeah. So you would, maybe Zaid, you would have a level that you would be looking at. Because you were saying that you would wait for a three-wave pullback. It sounds like you are into wave analysis. I'd say let's do this. I'm going to show you what I do usually with the markets. I'm basically, first thing I'm doing, I'm mapping out the key resistance points. The first one is there, and the second one is here. And if we then go down, the next key resistance point at the moment is this low, and then the next one is down here. So if the market is going to break this, it's likely to go to the next support level. And when I'm talking about market breaking a level, I'm talking about market breaking a level like this, not just briefly peaking below and then moving back up again, because we see those every now and then. So this is the first thing to do. Then I'm looking at the Fibonacci levels from the latest significant high to the latest low. And we can see that we have an area here. We have an area of confluence. We have the moving average coming together here with the Fibonacci retracement and this latest high. So that's going to be quite important. So if the market rallies to this level and then starts to roll over, then that could be a trade. If the market just comes up here, hesitates a little, and then moves above it, then we could look for a breakout trade. So when you have a level that is key level, it doesn't always mean that the market has to just turn from the level. It could mean also that the market moves above it, and then something like this happens. It moves higher, retraces back to the level, and then moves to the next key level. And this would be actually a preferable way of looking at breakout trades, because then once the market has rallied above this, the psychology has changed. And the same level that used to be a resistance is likely to be a support. And then it makes sense to look for buy opportunities here, because that breakout was a sign of strength. Okay, sure. Thanks, Cornelius. Thanks for the email. Why do we believe it will rise? I'm not saying it will rise. I'm saying this is basically a way of creating different scenarios. So this is one of the scenarios that the market moves up there and moves beyond that level. Then the second scenario is that the market rallies up there, starts to roll over and comes down again. And if that happens, what do we have here? We have another lower high, and then the market might push below this support. That's the second scenario. You have to be, as a trader, ready for all the scenarios. Whatever happens with the market, don't get stuck with one idea. You might be right, but if you start to defend an idea and the market does something else, then you might just find yourself trading against the market. But if you have mapped out all these different options, then you are better prepared to deal with them when the price action actually takes place. We have the Fed today, or the not the Fed, but the chair of the Fed, Powell, is speaking today. So he might create some volatility in the market. He might give an idea that they basically won't be tapering anytime soon, when the dollar will go up or down. Let me know. What do you guys think? Based on what you have learned already, if the Fed chair says we're not going to taper, what's going to happen? Or we're going to taper, but it's going to be next year. Is that going to take the dollar up or down? I'm giving you some time to type in the answers, and it probably takes a little bit for the system to update your answers to me. While I wait for those, I give you the other scenario. The other scenario is that the market rallies only a little and then breaks this support and moves lower. Then, obviously, we might see a couple of things happening. We might see the market coming down to this support or trade nearby, rally back up again to the previous level of support, and then move down again. So that would be yet another scenario. That would be, I think, the 1, 2, 3, and then the fourth would be the market breaking this and then breaking the next one also. So if you are mentally prepared for all those ideas, then you have better understanding, better idea, better preparedness. You are better prepared to trade the price action around these levels. Peter is saying, okay, I notice you use the if and then system. It's always best to stay out of the market till we are confident to go in. Oh yes, definitely. But because we don't know the future, we need to have a good understanding what different levels are and what could be happening. And I'm not trying to predict the market most of the time. I'm trying to react to the market. So I have all these if ideas, and then, you know, if the market rallies up there and starts to roll over, I look for sell signals. If the market rallies up here, goes above and retraces, I look for buy signals. If the market moves lower now, rallies back to this form of support, I look to sell. And always leave it to Mrs. Market to confirm the idea. Don't try to sort of tell the market this is what has to happen. Okay, another interesting market today is going to be CAD USD or some other CAD pairs. Oops, sorry, USD CAD I meant to say. That's mixed. I have some old. No, this is on the same chart, so it copies these from Euro, and that also can be moved. So, when you are looking to trade, when you are preparing for your day, if you see something like this, that you see let's leave this here for a moment. If you see that you have the fast moving average below, the slow moving average above, the market making lower lows and lower highs, then you know what to do. Then you have two options really. You can do what some people like to do and trade the breakouts. Let's take this for instance. Here we have the market moving below this support, but the market doesn't really go anywhere. It just stays below here a little while and then rallies higher. So this is the risk with the breakout trading, and you need to understand the risks also as the opportunities. Then the other option is that you do what, again, some people like to do. They sell the rallies. When the market is downtrending, they look at the stochastic oscillator, and when the stochastics gives a signal like here, they go short. Let me see, it was the crossover. Doesn't quite happen here, but it happens actually on the close of this candle. So that wasn't a bad signal at all. And then you would have a situation where your entry would be quite nice. But then there are situations when this doesn't work anymore, and problematic situations are those where the market just moves up. Let me see if I can find an example for you. Going back a bit. Searching for an example. Okay, here's an example. There's a stochastic signal taking place here. But the market, what happens with the market at the same time? The market moves sideways for a few days and then moves higher. But if you then stay faithful with the system, you can every now and get good entries as well. So the next one is here, and that was a really good entry. So these are different ways of looking for trading opportunities. And let's go back to the breakout idea. There are times when the breakouts work also. Like let's take this one here. Our market comes to this support, goes through, and moves lower for several days. So these could be your opportunities to take the trades. And I'm not saying in this webinar, we're not concentrating on what are the best strategies. Actually, that is a very deep and philosophical question on its own. But we are focusing on how to prepare for trades. So once we have read through the morning report, we understand what's going in the market, we understand the reasons why the markets are moving the way they do, then we go and try to find markets where you have trends, or where we have trends. We have clear trends, and we try to, next question is, how do we take advantage of these? And I've given you two options. It's either the breakouts or breaks below the supports in this case, or it's selling the rallies using, for instance, these indicators like stochastics. RSI could be another one for you. Any questions this far? Yes, Capano, we will email this to you. All right, just reading the questions here. Any questions you guys have about entering into trades? We have gone through quite a few details on how to prepare for the trading time, for trading day. Oh, thank you, McLean. I think we're going to finish soon, just tying up some things here. We have covered quite a few different things and a lot of ground already, so we can continue in another webinar. But looking for trade opportunities in the market is a little challenging. Oh, thank you, Safiso. Safiso is saying this session has been amazingly honest. Yeah, I think that's the best policy. Although I've heard people suggesting that the dishonesty is then the second best policy. But I believe being honest. Otherwise, you just don't know how to overcome the issues. If somebody's telling you, oh, everything is absolutely fine and absolutely great, it's so easy, you just go and do this, then there's too many expectations and people get disappointed, and then we don't get clients that stick with us. We want to have clients that are long, maybe there's a long period of time you want to trade it with us because we are being honest and we are helping you honestly. At least this is what I really, really hope. Leo is saying you are opening our eyes on a lot of things. Excellent. So glad to hear that. Thank you. What moving average do you use on your charts, is asking Tash. Basically, this is a 50 period. This is a simple 50 period moving average. You can, and I should say that you really need to go and try different moving averages and see what works for you. Try exponential, try different periods. But for those who are very new, this is just, how could I say it? These moving averages I'm using here are 20 and 50. And the more responsive moving average you want, the shorter the look back period should be. Now you can see 9 periods and the moving average is following the price more closely. And if you want, and then, okay, I'm not a big fan of crossover signals in moving averages, although people usually talk about those. It is mainly because of this. You get these times when the moving average is crossing over somewhere here. Let me see exactly where it happens. The crossover actually happens on this candle. So if you start buying based on the crossover, you are actually buying when you should be selling, right? So it doesn't make sense. Then there are periods when it does work. If you buy based on this crossover here, let me use the arrow. There it does work and you get a massive move. But before that has happened, there was a crossover signal here, fairly close to the top, not a good buy. And then the next crossover, if we go backwards, was, I think, here on this candle. So if you do use that crossover as a signal, you need to have something else also in place. And I think that something else needs to be your understanding of support and resistance levels and what's happening with the market. And just don't use one signal only. Make it a combination of things, and then you have a better understanding of what's happening with the market structure. Cornelius is saying, I was busy with customers. The chart you work on, will we be able to work on and draw lines like you also? Oh yeah, sure. If you download the the package, the MT4 or MT5, this is MT5. Let's take Euro Yen, for instance. I just want to have an empty window. I'm gonna, for the very new guys, I'm gonna show you how to add these. Oops. I'm gonna show you how to add these indicators, and then we start calling it a day. But yeah, so you go to insert indicators, and here under the trend, you choose moving average, and you give it a period, let's say 50, choose the color you like, and click OK. Here's your moving average. As you can see, sometimes they work as resistance areas also, and sometimes they work as supports, but they give you a good understanding of the trend. Just by looking at the moving average, you can see that, okay, this market over here was trending higher. But also, if you want to see without the moving average, you can see that, okay, the market made higher, high, higher, high, higher, high, higher, low, higher, low. So it is trending higher. Then if you want to add the oscillator I had here, you go again, insert indicators, oscillators, and stochastics is here. So, and I'm using 5, 3, and 3. You might want to experiment with some other options also, and you click OK, and it opens here in this window. Just a very quick warning, don't believe the people who say that you need to sell every time the stochastic oscillator is so-called overbought, inside overbought area. and that you need to sell every time or buy every time the indicator is at the oversold here and overbought up here. I'll give you the reasons very quickly. As you can see, market, when it's trending higher, it can stay in this overbought territory for quite a while. It can move against you for several days. So it doesn't make sense to be just a seller in an uptrend. And likewise, if the market goes here, you might not always want to be a buyer because the market is moving lower. In this situation, let me see what happened. Here's the first one candle that almost takes the market to the overbought territory. This candle does it. And in this occasion, it would have worked. Yes, the market rallied up. But when the market is moving lower, like here, the indicator enters over here. The indicator is entering or has entered the oversold territory. It goes below this 20 level. This is where market still moves down for another day. And that in Forex trading, when you have leverage, when you use leverage, 0.45% is quite a big move. So you really don't want to be long when the market is moving against you like that. Okay, cool. So, and before we go, I want to give you an idea on how you might want to buy the breakouts. Here we have a resistance. You have the break beyond the resistance level, then the market goes higher, but retraces back. When it comes down here, it does make sense to look for buying opportunities because we have this trend. We obviously, at this moment, we don't know where the market is going to go, but we know based on probabilities that in these situations where you have trend behind and the market comes here and bounces higher, it's more likely to go higher again. So that's something you might want to consider. And how do you prepare for something like this? Okay, first of all, you have started here, you have read through the report, you understand what's happening with the markets. Then you've gone to the market, to your trading plan, decided, okay, I'm not going to risk more than 2% per trade. And I'm going to risk 6% on this one day. So I'm going to take three trades. Those steps are there. Then we see the market retracing back to this level and we see it bouncing higher. Now, let's assume we see this somewhere here. We can start then entering into positions using so-called scaling in method. So it basically means, and I'm going to finish after this so that you can get your code, promo code. So scaling in means that you buy, if your risk is 2%, then you need to measure how much you have space between the first entry level and the next significant support. If you place your stop here, and I'm going to use the red line to mark our stop level. Go lower. I want you to go lower there. So this is your entry level. Okay, I'm getting a notice from the system that we are running out of time. So there's your risk, 460 per contract. In order to keep the risk below your 2% per trade, you need to adjust the position size. But the idea is to take several small positions as you see the market moving in your favor. Alternatively, you can also start buying down here below the entry if you expect the market to come lower. Anyway, cool. So we have to, it seems that we really have to finish this session now, because otherwise we are being kicked out from the session. But yeah, that's one way of looking at these trades. Obviously, you can take one position whenever you want to, and then then it's easier to decide how much you risk per every single entry you could enter. Say you want to buy one contract. Let's assume that your risk system allows buying one contract here. Then you can, and if you want to split that into several buys, you just buy at 5 different lots of 0.2. 1, 2, 3, 4, 5. And this gives you the ability to read the market and see what's happening. Obviously, you pay for it. You get a higher average price, and that's the cost, but you get more information. And this, by the way, something like this could also work in the hourly chart. It doesn't have to be the daily chart. Any questions on this? Oh yes, Garci, you can have the recording. It will be sent to you via email. Another way of trading these breakouts is obviously buy somewhere here in this candle, but it has certain risks. It could be the market is at the sort of lower stages of the uptrend, and you enter somewhere here and the market rolls over and you are stopped out. So that's a risk you have to take into account and understand that this is actually something that can happen. But as a rule, a method where you have a breakout and then a pullback and a reaction to the level is more safe. But the market always doesn't give you these. That's then the challenge. Anyway, I'm getting tired talking here for 2 hours on one go. Yeah, I'm more than happy, Cupano, to have another session. It's in about a month's time. I think it's going to be 11th of August. You guys are more than welcome to join me, and it's going to be an sort of ask me anything you want session, and I'll answer you anything I want. No, seriously, I'm going to answer your questions, whatever trading related questions you have. It's a session for all of that, all of those things that have been nagging you, things that you have wanted to know more about. Lovely. We have covered so much ground today. So I'm just going to call it a day and give you the promo code. But while I'm doing this, while I'm searching for the code, please give me a rating on this webinar. How useful was it? Rating on grade 1 to 5. If it wasn't that good, you can give me 1. If it was excellent, you can give me 5. If, anything between, feel free to let me have your view on my teaching. Basically, it's very important to me so that I can understand how to develop me actually, so that I'm more able to help you guys further. Oh, lovely. Thank you. Thank you so much. 100 out of 10. That's nice. I appreciate your feedback. And if you want to give me a lower than 5, that's totally fine. Just tell me why. I need to know what I need to make better. I always want to be better in what I do. All right. And here comes the webinar code. This is only visible for those who are joining the webinar. But here we go. Thank you, Samantha. Thank you, Copano. Thank you, Jelly. Thank you, Coronelis. Thank you, Garci. Thank you, Garrett. Thank you, Sefiso, Franklin, everybody else, David, Leo. It was lovely to have you here with me. And I so much look forward to having you in the next webinar. You can always go to TIOmarkets.com/webinars already now. And I'm going to show you the page. We don't have the time ticking here yet, but very soon there will be info on how many days and hours there'll be to the next webinar. So go to TIOmarkets.com/webinars to register for the next one. Cornelis is saying that I'm still not rich, and that's why he's giving you one. Okay, I got you. And just to, I know you know all this already, but I just want to mention this. Trading isn't get rich overnight scheme. It's a journey where you develop yourself, where you do everything in your power to get more knowledge about the markets and everything in your power to discipline yourself. And then you will start to see results. And remember what we discussed when we started. What's your definition for success? I would like to add something to this definition as we finish. The definition or the aspect I would like to add here is, if you are today, after this webinar, more successful, more knowledgeable, more disciplined than you were yesterday, then you are successful in your trading. If you are tomorrow, after your trading tomorrow, if you were able to apply the teachings, at least one little bit of these things to your trading, then you are moving forward and then you are being successful. So success is about moving forward and creating that discipline and stability and consistency that is needed to make money in the markets. Because Mrs. Market she's a little difficult every now and then, I have to admit. So make sure you follow her and understand her. It's a lifetime task, like every marriage is. So I speak from experience. I have a lovely wife and we've been together for 30 years and I so much appreciate her, but there's so many things to learn. You have to be ready to change. That's the secret in my marriage. I want to be ready to change. And if you want to be successful in the markets, you have to be ready to change. You can't change the markets. Okay, I think this is a good final thought for today. Oh, Michael, don't worry. Michael is saying that I don't understand much of the terminology. I think I need a complete beginner's session to go through some of the real basics. Yeah, I totally understand. Everybody is starting somewhere and everybody is new at some stage. So I'm more than happy to help you. Come to the next webinar, Michael. Go to TIOmarkets.com/analysis. Sorry, TIOmarkets.com/webinars. Go there now and register for the next webinar. It's going to be a Q&A session. You can ask any trading questions you have, and we are spending good time together just answering your questions. And Michael, also, if you have questions, more specific questions, please feel free to email me on support@TIOmarkets.com. Yeah. Just to make Mrs. Market happy, donate money to it. No, we don't want to donate money to Mrs. Market. We want to actually live on her expense. That's what we want to do. All right, good. So when you go and make your deposit on the website, you can basically use the code there. You go to the deposit. There's a little form where you can fill in the code that I gave you, and that's how the system knows that you actually attended. Lovely. Okay, thank you guys. It was good to have you with me here, and we really have to finish because the time allotted to us is about to come into an end. So take care and trade safe.